The BSP's short-term monetary instrument. What are the BSP's short-term monetary instruments? Do you know what are the differences of each of these instruments and how the BSP uses them? The BSP's short-term monetary instruments are Overnight Reverse Repurchase Agreement, BSP Securities, Term Deposit Facility, Standing Liquidity Facility, the Discounting, Overdraft Credit Line, and Emergency Loan.
First, we have Overnight Reverse Repurchase Agreement. An Overnight Reverse Repurchase Agreement is a transaction between banks and the BSP in order to control the financial stability and liquidity of our economy. Basically, it is the purchase of government bonds of the BSP from the banks with an overnight maturity in exchange for money, resulting in an expansionary effect on liquidity. This means that there will be more money circulating in the economy. But there is a twist because it is an agreement. The banks are obligated to buy back the bonds they sold to the BSP at the stated rate and with a specific deadline. If the banks were not able to buy back the bonds, the BSP is allowed to sell the bonds to the open market. Second, we have the BSP Securities. The BSP has the ability to issue its own debt securities in order to manage the liquidity in the financial system. These securities are either BSP bonds or BSP bills. With the use of these financial instruments, the BSP can now manipulate the short-term money market instrument rates to either expand or contract according to the current financial situation of the economy. They are low-risk, low-reward situations and are used in other short-term monetary policy tools as well, such as term deposit facility, overnight reverse repurchase facility, overnight lending, and overnight deposit facilities. The BSP Securities could have a tenor of 28-day bills with no limit because it is conditional on market preference and liquidity conditions.
The Term Deposit Facility is a program of the BSP to offer interest-bearing deposits to eligible institutions with a specific maturity date. We know that deposit means we put to banks the excess cash that we have. With the term deposits, there is a specific amount of time for that deposit to mature and yield its interest, whether it's 7 days, 14 days, or 28 days. The BSP offers this deposit in order to contract the excess money in the financial system. The standing facility liquidity is the way for banks and other financial institutions facing liquidity stress to seek help from the BSP and adjust their liquidity position at the end of the day. This might be because of too many deposits or too many loans. This would make the institution set at the positive negative 50 basis points target policy rate from the IRC structure. It would either make an expansionary effect if the banks obtain money or contractionary if the bank deposit money to the BSP.
Rediscounting is a way for the BSP to help the banks meet their temporary liquidity needs. By rediscounting, the BSP offers banks the ability to obtain the value of the money borrowed at the specified time that the banks need it. In simpler terms, BSP is enacting its role as a lender of last resort to the banks by issuing discounts, rediscounts, loans, and advances for the banks to maintain their financial stability. This would make an expansionary effect on the financial system since the BSP lent out money. Overdraft credit line is the financial instrument used by the BSP to cover the shortcomings of the banks with the BSP from the clearing operations of the PCHC. This clearing operation makes sure that the banks are still settled to meet their transactions or that there are enough secured funds as promised. So, in order for the banks to pass this clearing operation, the BSP steps in and offers overdraft credit line to help banks meet what is recorded. Because technically, the BSP provide loans for the bank with this instrument. It expands the liquidity of the financial system.
Emergency loan is the monetary instrument of the BSP to extend financial assistance to help solvent banks resolve the liquidity problems from various causes that banks could not control. It is stated in the new Central Bank Act that the assistance grant shall only be limited to the amount needed by the bank, but shall not exceed 50% of its deposits. This is another expansion of the liquidity of financial system due to the fact that BSP is once again lending money to financial institutions. This shows again the feature of BSP as lender of last resort to banks. The difference between standing facility and rediscounting. Standing facility gives the bank chance to reposition itself in accordance with the BSP policy rate. It could either expand or contract the liquidity, while rediscounting merely means that the bank sells its notes or bonds before their maturity date in order to obtain its temporary liquidity needs. It only expands liquidity since the bank is being paid by the BSP at this point.
The difference between overdraft credit line and emergency loan is that the overdraft credit line is when the BSP lets the bank have more credit than it already has in order to settle its fund specifically for the clearing operations, while the emergency loans are only granted for situations out of the bank's control with specific requirements and policies the banks must attain before borrowing. They are both expansionary since they seek liquidity from the BSP. The difference between overnight reverse repurchase agreement, BSP Securities, and term deposit facilities are: first, the overnight reverse repurchase agreement operates 5 days a week with an overnight maturity, meaning it already matures with its interest in the span of overnight, while BSP Securities operates once a week with 28 days maturity onwards, depending on the market and liquidity conditions of the financial system. Lastly, term deposit facilities also operates once a week but with specific dates of maturity, either 7 days, 14 days, or 28 days. Though their sizes to sell are all based on the BSP liquidity forecast, smaller the number offered for these means that the BSP is trying to expand the liquidity. The greater the number offered means that there is a contractionary effect happening. Thank you for watching and listening. Hope you learned something.